Welcome to my daily review. Today is Monday, April 7th. Just an average day, right? Normal average day, kind of flat. Nothing really happened. The Nasdaq was up 15 points or 0.1% with massive volume. You can see this big bullish engulfing candle down here for the Nasdaq. You can see it made a low. I've got to go to, first of all, back up the reel here. The volume was 60% above the 50-day average. It closed at 15,603. Okay. Those are the nuts and bolts. But really what happened here is we had a gap down at the open where it made this low of 14,784. Write that number down. And then it rallied up, to 16,292 within a matter of what is 9:45 to 10:20, and a half an hour. It went from 14.7 to 16.2. And then it kind of, sold off and then settled down for the rest of the afternoon. But if you were, let me go to the TQQQ. Let's just say you were just playing around this morning, you wanted to make a trade, and you see the Q's down, you think, oh my gosh, this is going to be, Armageddon. Today's, is going to be a massively negative day. And then it starts to rally. So you say, looks pretty good here. Starting to rally back above 40 here. Let's buy in at this candle. Oop, can't get in that quickly. It's up 45 now. Let's buy it here. And then so let's say you buy at 44 or 45 and it's up to 46. You're going, yippee. This is going to go up to 50. We're going to have a great day. And then you come back 20 minutes later and it's down to 38. Seriously, it went from 46 at 10:20 to 38 at 10:45. So if you took your dog for a walk, you lost a lot of money in that time. And so that's when you got to pay attention to your screens. Like if you're buying a call here and expecting it's to rally, and you leave your screen, you come back and you're down a lot. So yeah, you got to be careful there. That's why I didn't put any stocks on my ready list today, because I kind of figured it'd be a little wild. Not this wild, obviously not. This is one of the wildest days we've seen in a while. It was like a 10%, from the low of this is the TQQQ. I got to go to the Nasdaq here because that's a little bit revved up. It's a little charged up. So the low of the day was 14,784 to the high 16,292. That happened within a half an hour. And so, you could really, if you get emotional and you're gonna buy it when it's ripping higher and then it goes lower, it's not a good feeling here. So I'll go back to the 5 minute here, right? So if you're buying and it's going up, you're thinking it's great, then it comes back down, and then you're selling. That it's just too much of a roller coaster. But this is like a 10% move here from peak to trough to peak. Anyway, let's go back here to the daily, because the day's action was kind of wild, and I didn't want to be trading a lot in this type of environment. But the question everybody wants to know is, where's the low? When can I start buying without getting murdered in the market? I'm just going to say I believe today this is the day one of an attempted rally. Okay, so normally we wait 4 days, which would be day four. Well, last week we had a pink rally day and it looked pretty decent, right? Until it didn't. These right here, Monday we had a pink rally day, two, three. So we wait for the fourth day, and what happened? We got liberated and the thing fell out of bed. So anyway, I'm going to say this is a short-term low, 14,784. Is it safe to buy? No. I want to wait I'm going to put some stocks on the ready list and kind of wait. But if we have a follow-through day on Thursday or Friday, I want to be buying stocks. I want to be getting long. And I'm going to have a list of stocks. And at the end of my video, I'm going to show some things that I'm looking at here. But I just want to point out that in my opinion, this is a leg down, a 7% move with your top leading stocks, which I've gone over numerous times. They've been down 30, 40, 50%. And then it makes this, a lower high here. 20,204 is higher than 20,110, or 20,110 is lower than this high. So it made a lower high, then made this second leg down, made this bear wedge pattern. Here's our third leg down. I just said that was the low. That's a short-term low. this could be, leg one, and then this is leg two. We could have further to go to the downside. But for right now, I mean, I think we can say this is a short-term low, 14,000. Seven was it 784? I said to write the number down. I didn't do it. 784. Yeah, I think that's a short-term low. And what I'm looking for is just a couple of sideways days, which in this market we're never going to get, apparently. And then maybe a follow-through day on Thursday or Friday of this week where we could buy some stocks, get long, and have just a decent rally back up maybe to the 21. How far below the 21 are we? 10%? That would be a hell of a rally. 15% back to our 50 and our 200, which right here, the 50 is going to cross below the 200, which is the famous death cross. But anyway, a lot going on in the markets, obviously. People want to know where the bottom is. I'm just going to go out on a limb and say today was a short-term low, not the low, but a low. And I think that we could have a tradable rally. Just if things just calm down, just have a somewhat of a decent rally, maybe even back up to the 10, which would be 7%. This 10 is really, these things are just cascading lower. So we have a bear market. We're in a bear market. So trading in a bear market, usually your greatest up days come in bear markets because it's short covering. So that's why I say, we're going to give it a couple of days here to see if the shorts can cover and we can get an actual legitimate tradable rally. Not the start of a new uptrend, just a tradable rally is all I'm looking for. But from the peak, 20,204 on December 16th to the low today, April 7th, 14,784. That is a 27% drop. Okay, so that is a correction. That is a bear market. Look at it any way you want. I went through all the leading stocks and showed you how they're 50, 60, 70% off. I'm not going to do it again because I'm not looking at those. I'm looking at other stocks that I think could lead us in a new rally. But anyway, just wanted to point that out. 27% correction so far on the Nasdaq. Probably not over, but I think we could have a short-term rally before we make what would be our third leg down. It really is up to interpretation, folks. This is not science. This is art, So if I'm going to clear the decks here and go back here, you could just say, when the whole thing's over, I'll let you know if this was a leg or if this was the first leg down here. And then we have our, bear wedge, and this is our second leg. We have a little rally up, and then we have a third leg even lower, which, is plausible. Anything can happen. This 12.5 is definitely an area that I'm watching. And it's not that far down to, probably about a 40% correction from the peak to that trough right there. So just looking ahead, and I shouldn't do that. We just take things one day at a time. I'm going to go to the SPY. I'm going to go to the daily chart on the SPY. If it looks like a duck, walks like a duck, talks like a duck, smells like a duck, it's a duck. And this is a bear market. It looks like a bear, it talks like a bear, it walks like a bear. It's a darn bear market. And on the SPY, this will give me okay, it's only 18% off the high, but at the lows today, it was 20%. So that constitutes for the financial media geeks a bear market. But like I said, if you've been following the leading stocks from the last, uptrend like Tesla, this thing's 52% off of its high. It's more than it's lost more than half its value. Okay, so there's a lot of these stocks like this. App 11, no doubt, this was a leader, 55% off its high. Okay, CLS, 51%. So that is bear market action. And I said I wasn't going to do it, and I did because it just lured me into it. I couldn't help myself. But anyway, the SPY was down today. The Nasdaq was up barely. The SPY was down barely. I guess I'll go to the S&P because this is just an ETF. The S&P 500 index well below its 200 moving day average. It's been there a whole month of March, and now April as we're entering our second month here where it's trading below the 200, and that's 12% below the 200. And the 50 looks like it's going to cross below, and we'll have a death cross here in the S&P as well. But This one was down today, 11%. You can see the massive volume here, the last three sessions. Yeah, 70%. That's a lot, 70% above the 50-day average. So a lot of sellers today, probably a lot of margin calls, and then you get some buyers coming in and trying to buy the dips, and then they get hammered and they sell. So yeah, very tough market, very much a roller coaster, very difficult. You got to be really nimble and you got to scalp real quick here. As you can see, there's the same action that we saw in the Nasdaq, where the S&P traded a low of 4835. Half hour later, it's at 5246. And then if that's at 1020, then a half hour later at 10:45, 25 minutes later, it's making a low of 49.56. It's just super volatile, and just really tough to trade unless you're nimble, unless you're quick. You're going to be caught in this like whipsaw type of action. So just not a healthy market overall, though. Not when you see this type of volatility, this is not healthy. We want to see we want to see uptrends like you saw back here. These, just slow. You see the daily ranges are really tight trading as it makes a high. Yeah, it pulls back, cuts underneath the 50, but rallies back, tight trading. And now this is not tight trading at all. This is wide and loose. These big bars here on the downside, and especially these last three sessions, where you got the two inverted hammers here, and today closed near the middle of its range, but I don't think it was at the middle. I think it was a little bit below. So this is not going to be a pink rally day on this SPY. Just the Nasdaq we're looking at here. This is closing range was 42%, so not a pink rally day on the I'm on the IWM. What a dummy. I want to go to the SPY, not the IWM. The IWM is a disaster. The SPY is a pink rally day. Okay, so we're looking at the Nasdaq and the SPY, all right? And we have until Thursday till we get a follow-through day. So we have time. I'm going to go through stocks at the end of this video, but I just wanted to clear that up a little bit. All right. So, okay, I'll go through the Mag 7 since people are really, they glom on to this. Apple has got obviously some exposure to China, and with the tariffs there, they are, vulnerable. And Apple's definitely had a big move for a long time, and now it's just falling apart, and it's just in a free fall. And you're wondering where this thing might get some support, maybe at the low here, about 165, 164 here. I would expect, if it falls that far to get support at that level. It's way below the 200. I mean, it's just in no man's land now. Microsoft, this thing crashed way before. This is like the leader of the crashes. I got to go to the weekly chart just to find out where it topped way back here last July 5th. So the week of July 5th, Microsoft top. You could see it's well off of its high. Meta Platforms, remember, it was up like 20 days in a row here, and now it's just fallen off. So a nice run to the mountaintop, and now it's just down the other side of that mountain. So Meta well below its 200. It's pretty hard to buy stuff below the 200 for me anyway. I mean, yeah, you're looking for a reversal. You saw these reversal candles today. I think maybe the low's in for Google here. But how much of a rally can you expect? You're seeing the 50 cross below the 200, which we saw in NVDA recently, and this thing sold off, made a low today of 86. So people, you got some buyers here, some dip buyers trying to get a bargain here. You never know. Amazon, another one of the Mag 7s, made a low today. So a lot of these stocks made lows and then bounced higher. And it happened quickly. It was at the open. Just look at that open, buyers, and then, kind of looking a little bit like the index there. And then what was the last one? I think I got all Mag 7. Anyway, I'm not really even interested in those. But people, these drive the indexes and people are interested in the Mag 7. And I get it. These are safer stocks. And if the market's going higher, these are going to take it higher. So a lot of people own them, and that's fine. I want to go to what I think was a healthy action. Last week, we saw the Agnico mines. We saw the gold miners sell off. This one pulled back to its 50, which we want to see. We want to see because in a bear market, they get them all, right? There's no safe havens. And so you saw insurance stocks and defensive names and mining stocks still holding up well. And finally, they got to these ones. This is Agnico AEM sold off below its 50 on Friday. You know, it rebounded today and closed just a tick below its 50. AU, this one is still above its 50. It traded down to the 50 and closed just a tick above it. DRD, another miner that got hit. This one still, didn't trade down to its 50 either, looking pretty darn good. RGLD, another gold stock traded down to the 50 today. And so you kind of want to see all of every sector get hit. And then there's, nothing left to sell. Then, they can still sell stocks, obviously, but there's no safe haven. So that's just part of the process, right? Where they get them all. Gold, which is Barrick Gold, this one was sliced its 50 last week. Today, even further weakness, only closed down 3 cents, but you just making a point that the miners are, no safe haven. The some of these this Freeport McMoran, the copper trade, Southern Copper, and then the silver trade, these things are all, got whacked, which is what you want to see. And this one's even below its 200. So the commodities are not a safe haven. I'll talk about oil in a minute, but the other one was the insurance stocks, which had been doing so well. This is Bros, which had been surfing. The trend is your friend until it bends at the end, and this one bent and it's broke. So you just got to get out. This is bear market action, right? They get them all. Like I said, Hartford is another one that was doing so well for a while. Looked pretty darn good breaking out of this cup with handle pattern, but breakouts don't work in a bear market. And you can see this one, below its 200 now. Look at that. In 3 days, 3 sessions, it went from above its 10 to 3% below its 200. Man, that is a nasty move right there. From what, 120, 125 down to, 107. Man, that's some real pain. Like I say, you just can't hide. Progressive is another one. Traded down to its 200. Look at how fast that happened. These are trap doors, that's why they say, it takes the elevator up and then the trap door down, really. The stairs up and the elevator down, I should say. This one took the stairs up and the trap door down. All of them are the same, though. I mean, the Aflac, same thing, got whacked. To me, this is a good thing. This is healthy. I mean, if you own them, I'm sorry, but like I said, in a bear market, they're going to get them all. So it's good to see them getting them all, right? I mean, even Warren Buffett, his bunker, it was a safe haven there. And this one got, the bullets were flying. It was a safe haven, just surfing its moving averages. And then it got hit with the shrapnel on Friday. Today it got hand grenades. And this thing is, well, it traded down to its 200 and found support. Look at that. A 462 and now close at 490. We saw a lot of stocks do that. I'm going to get to that at the end of the video. A lot of stocks that I'm interested in. I'm not really interested in Berkshire, but we saw a lot of what I call high quality growth stocks trade down to their 200, find support, which is what you want to see in a bear market, right? The bleeding's got to stop somewhere, and stocks that can hold on to their 200. There's a lot of stocks below their 200 anyway, so they're the ones showing a relative strength now, believe it or not. Here's Berkshire Hathaway, BRKB. It's down to the 200 today, but still you can see the RS line pointing due north and a rating of 92. And that one went down to it because the rest of the market it's all relative, right? That's why it's called relative strength. So, yeah, BRKB holding in there. LMND, lemonade. This is another one that, had a nice little run here. Now it's below its 200. Today closed just a tick above it. So yeah, a lot of stocks just below their 200. Root is probably my favorite in this insurance group, and this one didn't even come close to its 200 close. Just yeah, a little bit below. Let me see. Well, 45% above the 200, but 10% below the 50 there. So very volatile stock, Root. Anyway, that's it for the insurance names. They're getting hit, so you can't hide. in Uncle Warren's bunker. And all right. The other one I want to point out is the oil went down to $60 today, which is not good. It shows demand destruction going forward. Some of the policies are not even no growth, they're negative growth. And so oil at 60, like they're not going to make money. No, I shouldn't say that. Oil, how can I say this? In a healthy economy, oil, when it's showing strength and the economy's growing, oil is okay at 75 or 80. When the economy's going weaker and the oil's coming down, it shows demand destruction at $60 and hopefully it doesn't go any further than $60. That's just telling us that the economy's getting weaker. And they expect demand to be lower going forward. Maybe people are losing their job and not going to be, driving to work as much. Who knows? It's all speculative. But I wanted to point out the natural gas component, EQT here. It was up to something percent, not bad. Some of the other ones that I'm watching here in this oil and gas traded down to the 200 and bounce. This is Antero Midstream, AR. Another one, traded down to the 200 and bounce today. It doesn't look like much, but the low is 31.88 and it closed at 34.15. So that's a 10% move off the lows, off the 200. So just watching these oil stocks. I know the FANG, I believe it was the FANG CEO sent a note to the administration saying, we can't function like this. This stock has obviously been punished. This thing's been torched, with a lot of other stocks. So this is just, it's bear market action, way below its 200 here. 29.6% below the 200. So yeah, I bet he's writing letters to the administration. Yeah, I mean, because they have a fiduciary responsibility to their shareholders, and their shareholders are losing money and they're getting mad. So they got to do something about it. And yeah, it doesn't look good for a lot of these oil stocks. I just pointed out a few that found support, but a lot of them are not finding support. I'm not going to go through all of them. The next group, because in a bear market, you got to look at essentials. If people are losing their jobs or people see their peers losing jobs, they're going to tighten their purse strings because they might be next. And so, you look at essentials. What is essential in life? Well, I think Netflix is essential because people want to stay home and watch Netflix. But you're looking at your food, your gas, and your drugs. People are still going to take their drugs. All right, because people need them, especially the boomers. A lot of boomers are, take a lot of medication. Gilead, this has been one strong stock. It broke out from a base, ran up to 119 and pulled back to its 50. It closed today a little bit below its 50. But I'm watching this one, the rest of this week. So if we rally, I expect it to, we'd undercut the 50 today. I expect it to rally back through unless we get more volatility and more, selling and more push to the downside. This is probably going to fail with the markets. But it has been holding up. AMGN, another one that I'm watching, sliced to 50. I go weekly on AMGN. This is a big base here back from July of 2024. So it's going on nearly a year here. Made this nice little cup with handle, but it's too steep here. The selling has been too sharp, and now it's below its 50. So let's see if Amgen can gather momentum and rally back through its 50 here. This is another key a biotech stock that I watch. I do have to mention this Rhythm Pharmaceuticals because they had approval today for I want to say semaglutide. I'll just say a weight loss drug. Okay, so there's a lot of companies that are trying to get into the weight loss because that's a huge addressable market for them. And this one was up 17% today on a day where the market was pretty rough. This thing, yeah. Well, even this one sold off at the open, but man, buyers came in, finished higher. So it should, massive volume here in a bull market. I would definitely be, into this one here, 17% move with that kind of volume. But in this type of a market, I'm just going to watch it. So, just monitoring some of this stuff. So when another company gets a approval, then Lilly gets hit a little bit here. Only down $14. It was down way more this morning. Yeah, it opened up lower, like everything else, right? It was down to 677, closed at 723. So nice $50 move off the lows there, pretty much for Eli Lilly. And then, of course, Novo, which has been taken out to the woodshed. This one's been bloodied, battered, brutalized. This one was up, even though another company. So, maybe this one's rounding into a bottom. I thought it was bottoming at 80. Nope. Came down to 77. What a bargain, right? Ran back up to 93. Nope. Now it's back down. You can't even see it down here. Jeez Louise. But anyway, Rhythm, congratulations. Lilly, Novo, man, you got a lot of work to do. All right. Some other drug names that I'm watching, ADMA is one for sure because of the, formation here, the chart pattern. Looks pretty decent. Cup with handle. If I go to the weekly here, there you can see this cup with handle. This is one that I would have put on our ready list, but I just, market's just a little too volatile. Traded down to its 200 today, like a lot of stocks that I'm going to show you here in a minute. I keep promising that I'm teasing. But anyway, it traded down to 1651, closed at 1840. So more than a 10% move from, low to high today for ADMA. Another one that I'm watching, obviously, is TGTX. These guys are the multiple sclerosis. They have some presentation tonight at a conference in San Diego, and then they have the KOL in a couple weeks, I think next week, actually, and then they have earnings coming up. So they have a couple of catalysts here. This one broke out of a base following earnings, ran up to 43, pulled back this morning to 33. So nice action there on this pullback. Just pulled back to its 50 for the first time since the breakout, much like Gilead here. Traded down to 33.70, closed at 37.25. So a nice bounce off the 50. Any stock, like I've just showed you a ton of stocks here, and any stock above the 50 in this tape is showing relative strength. And you could see the rating is 98, which is something that I look for, but it's not mandatory. When I'm looking for new stocks into a new uptrend, like we're going to have eventually, you need to pay attention to a couple things, and I don't think that is one of them. I'm going to get to that in a minute because earnings season's coming up, and I think we need to pay attention to those stocks that are, increasing earnings, sales mostly, earnings, yes, but mostly sales growth. And this is SLNO. They had an approval for a drug which want to come to market this month. Anyway, I got to look at the weekly here. It's up 3.2% in today's just horrific tape. But you could see the sideways action. Had this big bounce last week following the 46%, which in this market will take it. It hit 3 cents above the prior week's high. So we're looking for above 74 this week. And that would be the high from last week. But anyway, it just came down to its 10 and bounced nicely today. So nice move. Yeah, 3.2%. Anyway, that's it for me. Thank you for watching. Except for at mcstockcharts.com, I have one more thing, and I keep, like I said, earnings season's coming up. This week, we're going to hear from the airline stocks. We're going to hear from financial stocks. In a couple weeks, we're going to hear from technology stocks, Netflix and Apple and Microsoft and Meta. And we're going to hear from Dutch Bros too. And what they just raised same store sales guides. What I'm looking for in these, I'm going to call them younger companies because this thing's just in its growth phase. You're looking for 30% growth. That's all I'm looking for. If they top it, fine. If they don't, then I'll be a little more concerned. But yeah, if they have 30% growth and hopefully 40% or more, because they did raise same store sales guidance, they're opening more stores. I think this is a longer term. I think is, longer term. I believe this is going to do what Starbucks did, something similar, maybe not to the extent they're going to grow like that because Starbucks got huge, but they are only in 18 states, and I think it's got a lot of room for growth. So this is one that I'm watching. And what did it do today? It came down to its 200 found support and bounce. That's what you want to see in leading stocks. You can kind of count on them, right? Did it find support at the 50? No. It rallied back up, then got pushed down, with the market, and then traded down to its 200 today. What I don't want to see is it trade below today's low, 47.26. So that's what I'm watching there. If you bought it today, great. I would just say, if it trades below 47.26, you got to get rid of it. if you were happened to get into low this morning, you were watching this, this thing, you got a pretty good price, I think, short term. But like I said, can't let a profit turn into a loss. So, yeah, that's one that I'm definitely watching. Robinhood, I was watching this one in pre-market. It was down to 30. I think I noted that it was upgraded today or downgraded, one or the other. Bros was upgraded. I think Robinhood was downgraded. Anyway, same thing here, right? Trades down to its 200, find support. That's what you want to see. You can see the volume here, volume profile. Some buyers came in today. So that's what you want to see with what I think are leading stocks. This one's got the 40, 40, 36, and bam, triple digit 115. So you don't expect that every quarter, but man, if it can hold 40% sales growth, they're going to be delivering strong earnings, going forward. So that's what I'm looking for, those types of stocks. I believe I mentioned AAPL before. Yeah, this one traded down to its 200. To me, it's gotten a lot of negative press. I think three short reports, Fuzzy Panda, Bear Cave, and Culper Research. They could all be the same person. There's only one short report that makes himself known. That's Andrew Left at Citron, and he's getting sued. So it's a dangerous business. But this thing was at three short reports. And yeah, they took it down to the 200, but maybe, this thing took a punch, hit the canvas, and is back up off the deck and maybe ready to fight some more. I think I wouldn't count them out. I just wouldn't. I think this is one that even though it was a leader of the last um, uptrend and it's down 50 something percent, this is one that I've got a feeling about that at least you can trade it. It really moves fast. I'm just not going to give up on that one. Anyway, Oklo, I'm going to go to this one too. This is one that went up the mountain, down the mountain, pulled back to its 200 and found support today and bounced, 11%. So I'm just pointing these out here. I'm not saying, these are all going to be leaders of our next uptrend. CLS, this one was a leader. I wanted to show, I think at MC Stock Charts, I got a graph here. Gosh, I don't know if I shared that or not, but this thing had negative growth in 2021, 2022, and all of a sudden in 2023, it hit these big, large growth numbers, and that's why the stock did this, right? So, this is a leader of the last uptrend. I think it's on its way down in a stage 4 decline here. I don't think it's going to be a leader in the next trend. I really don't. But I could be wrong. I've been wrong before. Often wrong, never in doubt. But anyway, just wanted to point that out. GEV was another, IPO, recent IPO. I'd call this a recent IPO. Made this IPO base and ran up. Now it's coming down the hill here, but I would not, mm, I don't know. It pulled back to its 200 days. So of all the energy stocks, this is the one that I'm watching. The VST is another one. This one's well below its 200, but yeah, GEV is the one that I'm watching in that space. Fortinet, I like the cybersecurity names. This one pulled back to its 200 and bounced sharply today. CrowdStrike is another one that I like. This one closed a little below its 200. Zscaler, well below its 200. The one that I think could be a sleeper here is Rubrik. Traded down to its 200, found support and bounced. So this is the one going forward that I think has the most room. If you're looking for five baggers, which I am, and 10 baggers, and when I put my video together, after this earnings season's over, stocks that I believe are going to be able to grow and lead the next uptrend. This is going to be one of them for sure because I like the space, the cybersecurity space. They're taking market share. They're giving you this, accelerated, 38, 35, 43, 47 last quarter. If they could keep cranking that level of sales growth, the earnings are going to come. So it found support at the 200 today. So it's another one that I'm watching. Doximity, another one, DOCS, if I could type it in properly. It's got 17, 20, 25. It's getting accelerating sales growth. Not a huge, market cap, 10 billion. Traded down to its 200, found supports. This is another type of stock that I'm looking at. HIMS is another one. It's got the sales growth. Traded down to the 200 and found support. CRDO is one that I wouldn't give up on either. Had a nice run in the last uptrend. It's below its 200, but it's giving you this sales growth. So anything with sales growth like that, I'm not going to ignore. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up. Don't give up. Don't get down on this market. A lot of the news is negative, and I know it's a headline-driven market, so people are really paying attention to the headlines. But the market's doing what it's supposed to be doing, right? We're in a bear market. It's purging, and eventually we'll get rid of all the sellers. It'll purge everybody else. It'll drive everybody out. Everybody's going to hate stocks. Everybody's going to hate the stock market, and that's when we're going to pounce, and that's where you make your money on the downside, entering when it's low. I did show you NVIDIA back in 2022, right? When it traded down to, it was down to $10. Well, not back then. It was a 10-for-1 split. So if I go to the weekly, you'll see here. Yeah. So right here, if I go to 24, maybe. So it shows you here. Yeah, I even got to go further. Come on, Marty, get with the program here. There it is, $10 here, up to 150 here. That's a 15 bagger. So if you bought it when the market turned, if you're paying attention, you had a 15 bagger in NVIDIA. Will this do this again? No, it's not going to be 15 bagger from a $2.3 trillion market cap. No, it's not going to be a $35 trillion market cap. Sorry. You got to look elsewhere. You got to look for other stuff. And that's what I'm doing, trying to get stuff around, the 2 to 25 billion market cap that could give us 5 baggers, 10 baggers or more. And that's what I'm looking for. Want to hit the home runs, the grand slams. At mcstockcharts.com, we never give up.